Yo, what is up? Welcome to Hidden
Man,
Edge
we ain't those people.
episode
Don't do that.
21.
Don't do that, man. We're not
Don't
happy
forget to
people, bro.
hit the subscribe button and hit the like button. If I get 10,000 likes this video, I'm gonna go all in Palantir weekly calls. Let's go.
No, don't do that, man. This is
I know.
I hate when people are too happy when they start streaming. It's like, bro, we're
I'm
miserable,
always happy when I
right?
start the streaming, man. The stream is
I'm
fucking awesome.
miserable, bro. I hate streaming. I do this because I need the validation from the crowds. Otherwise, it'd be like whatever. I just privately just look at shit and be like, okay, whatever.
Bullshit.
Cool.
You don't need validation. If you need
I
validation,
do, man.
you
Everyone.
wouldn't
I'm a
be in
human.
cruises.
Everyone needs.
You wouldn't be in cruises if you needed validation.
No, that's exactly what I need. Do you ever hear Kobe when Kobe said, I'm not no, was it Kobe or Jordan? I think Jordan said it. Okay. Jordan said, I'm not addicted to gambling because he has a gambling addiction. He's like, I'm addicted to winning. So that's what's going on with me. I'm not addicted to streaming. I'm addicted to winning and then going publicly and being, look me, I'm winning. That's what it is.
What's that new Nike slogan? Winning isn't for everyone. That's a good fucking slogan, but too bad that
Really?
slogan can't get them out of the bear market, man. Because that's
Wait, really?
that's
That's their new slogan?
Yeah,
Winning's
winning isn't for everyone. I think they introduced that slogan during the Olympics, and I was like, oh man, that's a pretty good slogan because like, just kind of puts their top tier talent like right above them. But now it didn't seem to make a big difference toward their stock price. What's going on, June? What is going on, Silly Bunt, Midwest Cannabis, Ahad, Seth, Busy investor? Interesting. Welcome. Thank you for coming, everyone. So I got back from my trip, went to Germany and Poland, and you know what? It was a great trip. Honestly, like, I don't know. Maybe it's just because I'm more entrenched in it. Being back in the States, going to work every day, obviously have a closer eye on the market when I'm at home from vacation. But it is kind of like cathartic, to just be away from it all physically. Obviously, in this day and age, not be as far away from it mentally. But it is nice to kind of just be out there and experience like different cultures, other people, even though like handed the first part of vacation, I was in like big cities in Berlin, in Germany. It is just a much different culture out there in terms of how they all go about their day to day. And obviously people are a lot nicer in Europe. I don't know. You ever been to Europe before?
Yeah. It's genuinely people are nicer, but I feel like it's kind of like this New York versus the South kind of thing where in your face they're very nice, but privately they have like nothing but mean things to say about you. So like it's like that in the South too, where like if you're in New York, right? In New York, people say, "Oh, fuck you, I don't care about you," blah blah blah, and like they're just very upfront in your face. If you come down south, they'll be like, "Oh my god, bless your heart," but like internally, they're like, "Oh, what an asshole," So it's kind of like
Go ahead. So New York people,
yeah.
everywhere but New York, people talk shit about you behind your back. In New York, people talk shit about you to your face.
Oh yeah.
I mean, I would agree with that 100%. Like New Yorkers, we don't F around. Like we just say it as the truth. And when I moved to LA, like I was just my wife, and even people who I've known like say like I'm an asshole. But like I'm not being an asshole. I'm just like being real. Like if this person's an idiot, I'm gonna tell them they're an idiot. Like I'm not gonna like go up to them. I'm not gonna go up to them and be like, you're an idiot. Just like sometimes some people would say something. I'm just like, that makes zero fucking sense. Like I don't even know how the hell you came up with that. Anyways, one thing I wanted to talk about though, real quick, that really stood out on the trip was it didn't really hit me obviously until I was in Poland. But I mean, if anyone is aware of the geography, Poland is like literally right next to Ukraine. When I was in Warsaw, which is capital of Poland, it's like you wouldn't even know there's a war going on 300 miles away. Like, I'm not trying to diss anyone's culture or anything. This is just from my perspective as American, and call me ignorant, whatever it is. But like, it just seems like this country is like doing really good, like especially being in the outskirts of Krakow, which is Krakow, which is the city closest to Auschwitz, one of the biggest concentration camps during World War II. And like the city is just doing really well. Like, and I guess like an underlying fear, because one thing I noticed that with Polish people is like they don't bullshit either, right? Like they don't go around, they don't like smile at people, you know, like, oh, have a nice day, you know, sort of thing. Like they're very like straightforward people, and they're not rude at all. Like they don't like to BS around, right? But like one thing has like that I kind of felt, and I've spoken to a few people out there, was like they kind of all like have like this little bit of fear that the war might extend outside of Ukraine. And for a headline for us where it's like, oh, Biden says that, you know, people in Ukraine can start using missiles, long range missiles, whatever. And then Putin comes out and like he says like, or he like flexes a little bit and, you know, launches one of his missiles and like says like there's no nuclear warhead in it, but like this is what we're capable of, you know, like for us, like that's a fucking headline. But over there, it's like, dude, that's their life, right? Like you don't think that, I guess for us, like we take it so, what's it called? Man, I keep forgetting the term. We take it for granted that we're like 12,000 miles away from the war, but over there, they're like just a few hundred miles away from the war. So like anything can happen that'll impact them way more than it impacts us on a physical and immediate scale. And it's just like to be able to live every day knowing that, I mean, these people live pretty peacefully. They live pretty good. Maybe they've been surrounded by it their whole lives, whatever it is. But it's like, dude, what if there was a fucking war in actually no, you're okay, in like Cuba, right? What if we were fighting the Cubans, or what if there's another country that are fighting the Cubans like a few hundred miles away from you? Like, would you be able to just live every day like it was nothing? Or would that kind of like go through your head every day, being like any day this war can just reach over here, right? Like it was just kind of interesting to just fathom that kind of actuality or reality in that scenario. To think like literally I could drive a few hours from there and I'll be in Kiev, right? Where there's an
so here's the
ongoing battle going on.
question.
Yeah.
So here's the question: like, do people just like genuinely pay attention? Like us right now, when it comes to our media is like around the clock covering certain issues, and we're a lot more in tune with our social media. That tends to be a lot more like fear mongering too. Like, you think it's the same thing over there in Europe? Like, do they get the same information, the same level of information, and dramatized to the same degree? Because I think that could be the
social media. The one thing I've learned is that the amount of times I see people on the phone over here, you know, just always like their head down the phone, like same thing out there too. Like it's no different when it comes to that. Like everyone's on their phone out there. And I saw the same when I was in Peru or South America. You know, in other countries, you know, it wasn't just the westernized country, Europe, but also like the further out countries. And even in Morocco as well, like there were people like just glued to their phones. Like it's the same thing. So you'd have to think that at this degree of technology that we are in right now, is that it's no different what people are seeing online here versus what you're seeing in Europe. Like I'd imagine you're seeing the same similar stuff, or at least the outreach is very similar. I mean, you know, I'm sure people in like Poland aren't like going on CNN.com and trying to see like what the latest news is, but like it reaches the social media that you have even all these political figures like have like sharing a similar mindset, or at least sharing similar policies, that it would reach out there, and even celebrities and all that stuff. Like it's just 10 years ago, this would not be the case, but today this very much is the case, that they all kind of share like a similar type of technological era that we're in, even though, yes, Europe might be somewhat further behind in terms of their groundbreaking technology. They still are as engulfed in social media as we are.
Yeah, interesting. Yeah, I don't know. Maybe the Poles have just figured that, hey, listen, whether we like it or not, you know, a day is going to come by. You know, the next day is going to be the next day. So let's just live our life normally, and it goes from
Yeah,
there.
I mean, that is one thing that I've noticed. Pretty much not almost every, but like from a lot of cultures outside of the U.S. is that like people don't necessarily take their lives for granted. I'm not saying that people in the U.S. do that, but there's a lot of things that we kind of take for granted, being as spoiled as we are as Americans. That people generally don't do that out there as much. But you know, it is what it is. It is what it is. Just wanted to talk about that stuff that just kind of reflects me a little bit, being overseas. How was Thanksgiving? Because I certainly did not celebrate that.
It was good. It was good. I went to
Good
my in-laws' place. We had a Thanksgiving dinner that weekend.
Okay.
Last weekend, I was in the North Georgia mountains. Yeah, it was great. We do like an annual cabin trip with our friends. Sometimes around Christmas, sometimes around Thanksgiving. This time, I think everyone is kind of like doing their own thing for Christmas, so we did more towards Thanksgiving.
Okay.
Dude, I'm eventually gonna buy a nice cabin somewhere in the woods, like in the mountains, and basically just drive up on the weekends and just stay at the cabin. Like I felt so disconnected from everything, and sometimes you just need to be disconnected. I mean, you're still connected, but when you're that far up and you don't see people and kind of like it just feels a lot more peaceful. The atmosphere is much nicer, so I don't know. I don't know when it'll be, but one of these days I'll probably just talk to the wife and be like, all right, let's go look for some cabins and buy a
It's
nice
pretty
cabin up in the
easy.
woods.
It's pretty easy to be disconnected during the weekend, if you're not
Yeah.
in a major city. I mean,
Yeah.
just the fact that, like, for me, like personally, when the markets aren't open, it's very easy to stay disconnected, probably because of the fact that I'm not on my computer all day as I am during the workday.
Yeah.
But just generally, like, I'm not like, going on Twitter. I'm not like all over Discord, emails, and all that stuff. During the weekend, I'm generally like spending it with family and stuff. And then you pile that on with the fact that you're in a cabin in the middle of nowhere, probably with no reception, and everything you need is right in front of you. It's least likely you're going to actually start to interact with people and do all this stuff while you're on that trip.
Yeah.
That's good, man. That is nice. I mean, yeah, here we are back again. It's Monday, December 9. For me, it's like the first day back, the first major day back from vacation. And we got quite a few things to talk about, man. I mean, China's up like 20 million% today after being down like 50 million%. So we didn't really go anywhere from that. Um, Bonds are coming back. From one thing that I've noticed in the past few weeks, bonds have quite rallied a little bit. Yields have fallen a little bit, which is good. The dollar still is in the same place it was for the last few weeks, which is kind of surprising because that has put upward pressure on yields. We could talk a little about that too as well. And one thing that happened last week that was actually pretty interesting, and I was like flooding myself with podcasts pretty much for the last few days, is because there were so many damn good interviews that were from the summit. Especially the interviews with Andrew Sorkin. I know you watched a few of them already, but you had an interview with CEO of
Bezos,
Google, Bezos. I keep on forgetting, you know, maybe
Sundar
it's my
Pichai.
fault,
Yeah.
but I know it's like the freaking CEO of Google and the CEO of Microsoft are both Indian, the same fucking people in my head, whatever. Sundar Pichai, and then they didn't do Satya, but they also had Ken Griffin on there. That was actually a pretty interesting one to listen to. Sam Altman had one as well. And like it was all like kind of centered around like, what do you think about Trump? And they're all like, hell yeah, like this guy's gonna be pro business, it's gonna be good for all of us. Like, and then on top of that, did you listen to the Compound and Friends podcast last Friday? The
I didn't get a
Compound and
chance
Friends.
to.
So that one was more centered around opportunity as a contrarian investor. I forget the gentleman's name, but he was very big on China.
Yeah.
And one of the things that probably was the big catalyst for this rally that we had in China was that you had negative sentiment, right? Like China's just been going down since it hit its peak, like in early October. And it was based on the back that the stimulus had that the PBOC or People's Bank of China had once announced is like kind of too optimistic, and it didn't live up to those massive expectations that they had leading into the downward fall. And it was like countless over and over again. Like people expected like 5 trillion won or whatever. And all of a sudden it was like, no, we're going to get like a fraction of that. And like people just kept on selling out of China. We saw hedge funds like outflows from China and so on. And then all of a sudden you see yesterday, well, especially with the last few weeks with the whole tariffs and everything, Trump winning, it like put negative pressure on China. In reality, though, I personally think that a lot of the falling in China in the last few weeks was a result of the US dollar dropping, which was a result of China selling bonds, which is also selling US dollar to buy their own currency and prop their own currency up against the US dollar strengthening. And if you have Chinese currency being purchased by its central government and dumping bonds, that money is not going to go into equities or help the equity position with a strong one that is propping up against an even stronger US dollar. That generally is negative for a lot of emerging markets. And that was one thing that I found very interesting today, was because even though China was up like 20 million percent, or sorry, KWEB was like 10%, FXI was up like 8%, the dollar was still up like 20 bips, which is pretty decent. It's back to like where it is around its highs. But yields are down. So like, what is your whole thought about what happened with China today versus like, I don't know, when I checked like 24 hours ago where it was just flat, like what made a difference in the last 24 hours that would cause it to be up so much today?
I mean, to me, it's pretty simple. Right here, it's just this. If you show my screen, basically China's going through a lot of deflation right now. You can see that their CPI is basically fallen to very low amounts, PPIs in negative territory, which means that from an economy standpoint, they're possibly going to have a lost decade if they don't change course. I mean, they've got deflationary headwinds coming from population growth declines. So basically they're not growing as fast, their population, and they're actually going to start losing population. The population is aging, so the productivity of its populace is going to start to kind of come down a little bit. A lot of factors that are very similar to the Japan situation are kind of happening to China right now. So what everyone was hoping for during the September rally, which is China would be a lot more stimulative with regards to fiscal and monetary policy, the data is pointing towards the need for that. So, the Chinese CCP, they're not trying to broadcast that out. So one of the main goals that they had was they didn't want to repeat the same mistakes of the prior stimulus measures where they did big, bold stimulus, but it kind of like died down afterward and it wasn't sustaining. Unfortunately, big, bold is what's needed right now in this current market. So as the data comes up weak, the likelihood that they're going to be a lot more accommodative, both fiscally and monetarily, it just, it comes to a head. So yeah, I think China is a great place to look for opportunity. And we'll see what happens. But right now I have my FXI spreads, which are doing really well. I was able to, of course, roll them back last time, which helped out a lot. I'm holding. I sold some of my position today, not a lot, but I sold some of it just to basically take some of that and dump it into some new stuff that I have going on. Yeah. But I think opportunities like this, I think this is a market reaction to something that the market is expecting. That doesn't mean that the expectations will live up to what the market expects, but in the short term, why not just celebrate the win and go from there? So I think a lot of people are also considering hedging their U.S. exposure with some Chinese equities as well, because if you look at it, the U.S. is pretty high in terms of like total valuation of the market versus China, which is on the low end. Yeah, so if you want to hedge,
which is very much deserved, though. I mean, like, we're the center of technology, like we're the center of innovation around the entire world. I mean, if you just look at the amount of flows in European markets compared to the U.S., I'm not saying one is better than the other, but I'm just saying that when hedge funds and fund managers, they want to chase alpha, they usually put in the U.S. markets, and so do foreign investors as well. They put in the U.S. markets. That is where the most liquid is. That's where the most innovation is, the earnings growth, and so on. And it does command a higher multiple. It'll be nicer to get a lower multiple. It's very hard to ask for a lower multiple when things are just looking fine. And companies are meeting expectations, and also when analysts are just increasing price targets and earning expectations for 2025. So, I mean, we'll see what happens with that. But like, one thing that I've noticed from the 13Fs, and what's very difficult, because we talked about it several times, was that those 13Fs that we saw that were reported in mid-November, that's up until September 30th last quarter. So we didn't see what people did after that. So right now, on paper, it looks like, damn, all these hedge fund managers are bullish as hell China. But then what happened with China when October rolled through? You saw like the biggest landfall that you've ever seen since that huge rally started. Today, you got a little bit of reprieve, but like generally when you're in like a crash mode, which is what they've been since they're more than 20% from their highs, you can see these outlandish like short coverings. I think today was more of a short covering. I'm not saying it's going to fade, but it's very easy for this move to fade, given that it is, once again, like you said, it's based on expectation, not so much policy, not so much a fiscal policy move or a monetary policy move. It's basically saying like, hey, we're going to loosen monetary policy if there's more tariffs coming in. Xi Jinping said that for 2025, and it's just like, oh, well, you know, words.
I mean, they did
words.
signal that they're going to be a lot more stimulative. I mean, it's not a definitive, we're going to let loose X amount of dollars. So it's, not really a measured approach, but overall, when you see the directionality wise, it makes it's jawboning by their central bank, which is fine. That gives you indications on where things are headed. The real question that we should be asking ourselves is, because we are US centric investors, how likely is it that this comes to us as you what do you call it? Because what tends to happen is, when companies like this are countries are super stimulative, what they're essentially doing is subsidizing a lot of manufacturing, subsidizing the production of goods and services, and those services eventually make their way into foreign markets. And the thing is, if the item is being subsidized, that means that the cost of it is actually being lowered all around the world. So I'll give you an example, and this is where you have like these anti-dumping laws get placed, and what the U.S. is doing with tariffs. This is specifically the reason why. Right now, China has a really big solar manufacturing industry where they produce, I think, like almost 80 to 90% of the world's solar. What are they called? Solar. God damn it! What am I blanking right now? Solar panels. And a lot of it is heavily subsidized by the local governments in China to make sure people have jobs and all this other stuff. So what ends up happening now is that because they export it out at a discount, the U.S. consumers who have to pay with the U.S. dollars, they benefit significantly because they're able to buy more of these panels for super cheap that are all being subsidized by the Chinese government. So in terms of deflation, it's good for us because kind of we want to have a disinflationary environment. But if it's too much, it could impact us here because our local manufacturers are going to be hurt by all these exports that are coming in. Well, imports that are coming into the US. So this is where if you have to look at all of this from the global perspective. And the one thing I'm noticing is that overall the world is going to face some disinflationary. Well, they're going to get a lot more disinflation than people think. The US probably is going to feel some of it. It's not going to be direct right away, but we need it too, believe it or not, because one of the things that we really need to do to get our debt in line is basically start lowering rates at a healthy pace. This way, like the new debt that comes online that gets rolled over is going to keep coming down. So we'll see what happens. But my take is we're likely to see a lower rate environment than what the markets are currently projecting for 2025 and 2026. And if that happens, that leads to a kind of like two things happening. Number one, you have lower inflation, which is hopefully going to trigger a lot more cuts at a faster pace. And those faster pace cuts will then help kind of change up a lot of the businesses that have been negatively impacted by a higher yield environment. So yeah.
I actually would say the opposite. I don't think I think the market's getting it right with how many rate cuts we're going to get in 2025 because it's significantly dropped as far as the projection goes from what we've been seeing in the Fed funds futures markets that we saw before the September cut. I do think that inflation is going to remain a little bit stickier than people expect. Maybe a modest increase as a year-over-year change, probably somewhere in the high 2%, maybe low 3% if we get there. But I do think that the employment market, and I mean, you've probably looked into the non-farm payrolls from last Friday with the Doge Committee, Department of Operational Government Efficiencies, I think. With that coming, I think that is going to put a cap on the rates of increase for government funding. And with that, you might see some of those unemployment numbers tick up a little bit, mostly because
Yeah.
it's being propped up by a lot of public, by a lot of public positions. I mean, really, if you think about it, most of the unemployment has been in private sector. I mean, you've seen it across the board. That's X health and that's X government. But besides that, yeah, private sector has been getting hit pretty hard when it comes to the number of payrolls decreasing. The only thing is that what's interesting to see is, or what will be interesting to see is the amount of immigration decreasing. And when you think about this is why I asked you what did you think about the podcast? And they brought up a pretty good point, and is that you have a lot of people who are immigrating into the country, and statistically these people, they take lower income jobs, so they make it difficult for people who are quote unquote lower income or lower education to demand a higher salary because they have so much competition. It's basically like flooding the gates with a lot of participation in the labor force, but on paper that participation isn't actually as high. But when you have a lot of illegal immigrants coming in, they don't necessarily get accounted for, but they are taking these jobs at a lower pay. So you have a lot of these companies. They are able to cut costs, but at the same time, it's at the expense of it's basically when you think of the economic inequality of the country, like you have upper class just diverging away from the diverging away from the income of the lower class. Like the richer just keep getting richer and the poor just keep getting poorer. Middle class keeps paying for taxes. That's just how it is for us. But when you start to see that happen in the upcoming years, where this immigration is starting to be cut, what is going to happen with the lower class at that point? Is the lower class going to demand a higher salary, being that it's less competition for them for the much lower salary people, and which would actually be inflationary? So is this immigration policy that's going to come in, is that actually going to be an inflationary event or a deflationary event? Like you have
It's pretty simple. It's going to be deflationary, and I can give you the perfect example of why it's going to be deflationary. It's all about population growth, right? More people require more goods and services. Less people require less goods and services. So imagine right now you have 1 million people less to house, 1 million people less to provide electricity for, 1 million people less to provide schooling for. All of that stuff ends up going down. And you can look at Japan. Look at Japan. What happened? Japan's population is shrinking. There you go. You got a deflationary result. So I think right now when
population's increasing, the
that,
mean age population.
yeah, the median age is increasing, but it would be the same thing for us too, because right now, I think the last time I checked, the population growth in the US was below replacement. It was like 1.7. And the only reason why we've had positive population growth over the last few years is because of inflation coming in, right? I mean, people coming in.
Immigration.
So,
yeah.
so the thing is, if you reverse that trend and you kind of stop that immigration, whether it be legal or illegal, you're also going to be declining in terms of like total the world, not the total world, but the US's population growth. And if it's the same thing that happens like Japan is a clear example of what happens when population decline. That means goods and services are not necessary. Like here's an example, like if you go to like outside of New York City, the number of people having kids is all like it's shrinking, right? So the schools in upstate are actually shrinking, so they don't need as many teachers, so that's kind of unheard of. Like you would think that, wait a second, like there should be a lot more kids right now because the population has grown, but the truth is not a lot of people are having kids, or at least they're not having kids at the same level, which means that a lot of classes are shrinking. Like even the median age of the population here in the US, I think it's 38 now.
That's going to be pretty interesting to see where the education system goes, because I know some of the officials that they're bringing in are kind of pro-education, which I feel like we've been lacking a lot for a while. I mean, I don't know if it's that much of a problem out there in Atlanta as it is for LA. I mean, but I grew up in New York and I'm in LA right now. Like obviously these are the two largest educational systems in the US, but it's just terrible out here in LA. Like the amount of budget that goes into the education system out here does not equal the quality. And I don't know where the hell the money goes. And I'm not going to sit over here and be conspiratic about it. But like someone needs to make sure that shit is getting under control, because like the education system is just terrible out here.
I've always been of the mind that it comes down to parents. Like no amount of money is a replacement for good parents who basically sit down and make sure their kids do their homework and, you know, actually absorb all the things. And as time goes on, do the course correcting necessary in order to get a student or, you know, to be better with their education. So like here's an example. If you take like, you know, in the past, the 1940s, 50s, 60s, moms typically stayed at home, you know, and it used to be single breadwinner households. So you had someone at home. So when kids came home, mom would, you know, stay with the kids, do the homework, all that good stuff. And then in the future, now we have like a dual income household, and you need the dual income in order to survive. And what ends up happening now is that, you know, the entire education process has been kind of like substituted with just school, right? Like, no, there's parental responsibility that comes with educating your children outside of just what the teachers at that school teach. And then on top of it, the parents have to stay on top of it. And the thing is, sometimes the parents are working 2 jobs, 3 jobs.
Yeah.
And the thing is, like, the kids, you know, whether they do their homework or not, doesn't get followed up with. And then if they don't follow up with it, the kid gets left behind, then people don't recognize it. And it's just, it's this back and forth thing. So I think it ends up being a social economic bomb. And the thing is, a lot of people think that, oh, if you spend $20,000 more than the next state over, the education result is going to be better. And it's like, no, there's plenty of,
That's where the efficiency comes from, I think. I don't think it comes from like decreased spending across the board, more like so what do you actually do here? Sort of like Office Space, you know, where like they're sitting down, they're like, what do you actually do here? You know, because I'm sure if you went across the whole public organization in the government sectors, and then you ask every single person that question, like you could probably get rid of half the fucking people out there. Like, just like, what the fuck do you actually do here exactly? And like, why are we paying you? But like, just with the way that things are, especially in California and New York, is that like, you can't just get rid of someone that works for the government. Like, there's a reason why they're tenured. You know, Zoe Cold actually said this. Oh, wait, hold on. This one over here. I'm guessing Zocold's kids might be going to public school. Could be wrong, but generally what I've seen, because I know people with their kids are going to public school. My kids go to private school out here because like it's really the only way for them to get good education out here where I live, specifically where I live in LA. And one thing that I've noticed is that I'm paying like $1,200 per kid, and I got 2 kids per month, right? And they force you to be so involved in your kid's education, attending all these events. The amount of homework my daughter gets, she's in kindergarten, is obscene. Like, it takes her like over an hour to do. And it's not because she doesn't want to do it. It's because like, dude, she gets like 5 pages of homework every night in kindergarten. My son is in preschool. It's part of the same school district. It's part of the same private school. And he's getting fucking home. Preschooler is getting homework. What the hell is going on? But I'm not going to lie. This school got really good. It has really good ratings, and the kids graduate. Some go to Ivy League, whatever. But the community that they've built is very disciplined, right? Like the kids grow up in 12th grade. Like they're not like hobos or anything. Like these are good kids, and they all are very studious, right? Like, and it's good. But I'm paying $1,200 a month on top of my taxes and shit for it. It's like, why am I paying more money for more of my time? Like, but you know, I'm not going to argue with it. I do it anyway because I'm a parent. That's just what I signed up for. But at the same time, it's like, is this really what it comes down to? Because I asked my buddies in New York with their kids and everything, they pay double that per kid out there to get a decent education. And don't even get me started in the inner city school system. It's ridiculous. Like, it's terrible. And and I was a teacher shortly after college for a little bit. And dude, half these parents give a fuck. Like, you would tell them, you said no to them, you speak to the parents, they act like, oh, okay. The kid would just continue doing it. I'm not expecting a change overnight, but like, these kids are definitely not changing. And if they're not changing, that means their parents aren't changing, right? It's just, a lot of it really has to do with that. But going back to the point that I brought this up in the first place, as far as government efficiencies, is that, I mean, if you really have all of these efficiencies happen in the government, decrease spending, so then that means that the fiscal debt is, I'm not saying it's decreasing, but the rate of fiscal debt is slowing down. And then on top of that, if you increase GDP, that means that technically speaking, your debt to GDP ratio is actually going to drop from 7%, which isn't that high on a historical scale. But if you're able to keep that under control, especially with the, I listened to a few podcasts with Scott Bessent, which is the elect Secretary of Treasurer, and he really is all about keeping GDP north of 3% and getting the debt to GDP ratio down to 3%. And I forgot what the other 3% was, or what the other 3 was. It was a 3-3-3 rule. If you really do that, like, there's a pretty good chance that this regime will actually do very well for this country. But I don't know, man. Like, there's too many questions about what's going to happen in 2025, especially seeing the way that markets are handling the situation. Like, obviously, you have the equity markets rallying, and we get like one red day, everyone thinks like it's a complete top. But at the same time, it's like bonds are still north of 4%, right? They're like 4.1% for the US 10-year. The dollar's still at 106. So, like, what exactly is what's going to happen? I don't know what's going to happen in 2025, and I don't want to sit here and position a portfolio as if I know what's going to happen. But at the same time, it's like, I'm just fucking confused, dude. Like, I'm confused how this is all going to pan out. I do think the Santa Claus rally will continue. But after that, in 2025, like, I don't know what's going to happen. Like, literally, the bond market can just fall off a cliff, right? Like, if that falls off a cliff, then the equity market's going to go through sham. They're going to go through turmoil for the next year. Like, it could just be a sideways market for the next year. And that's if the bond market doesn't give up. I mean, right now rates are pretty high, right? Like, we still are in a tightened economy, right? Like, it's just, I mean, like James says, worry about January. You know how many times I hear that, oh, the first few days of the year are going to be like a red day, like it was last year. But at the same time, it's like, really think about it from like, if kind of zoom out from like a larger scale and everything, like how much of this is already priced in to the equity markets that the bond markets and even the dollar and the currencies are priced as if like we're going to be sideways for the next year. I mean, like, how does that actually pan out, and how does that impact emerging markets as well? Like, what do you think?
I mean, I'm going to say that the traditional playbook might probably work best. Like, check this out. So, this is like the general formula for like the 20-year averages, right? For the markets. So usually the weakest months are January, February for the NYSE. So January, February, and then S&P 500 is January, and then Nasdaq is usually February.
What's the NYSE composite?
New York Stock Exchange.
The composite,
it's just things
though?
listed. Yeah, it's pretty much just all the stuff listed on the NYSE.
Oh, okay.
Yeah. So,
What ticker is that? Oh, is that the Nasdaq composite?
No, the Nasdaq is different. NYSE is like, let me just show
what's
you.
That like? What's the ETF equivalent of that?
Let me see what. I mean, they have a lot of. Hold on one second.
Oh, okay. I know
components right here.
Yeah, it's basically like the whole market index or Vanguard. Vanguard has something similar to that. Okay, I was just wondering. It's my bad.
Yeah, so basically, we're in a point right now where, we'll probably get a weak January, February. We'll be buying opportunities, throughout the year next year. I think the rotation is not done. We'll see some rotation from growth to value and then probably return to growth again. The real question is, how will cutbacks on government spending, if that does go through in years, the latter half of 20, I don't know how fast the Doge committee is going to actually be working. See, the thing is, the goals that Vivek and Elon are putting out are rather ambitious. And the question is, what is the timeline on the cuts that they're proposing? Are they going to be enacted in 25, or is it going to be more towards 26?
I don't think it matters.
Well, it does matter, because that means that 25 could be the year that the rally keeps, a little bit of strength.
I mean, I don't think it matters like when they decide to enact their policies, or like when that dollar amount actually starts to show up. What matters more is the speculation about it and the market front running it, which is really what we see. Like, Trump's not even fucking office yet.
Well, that's what I mean.
I'm saying, office yet.
That's what I'm saying. Like if the Doge committee starts to say, look, this is where all the areas of cutting are necessary, Congress has to get together, and when they're planning out their new budget for the year after that, that's when they're going to start to say, you know what, this department is going to get this cut, this sector is going to get this cut, and basically a lot of the impacts are going to be felt in 26. You know what I mean? So
Yeah.
25 could be a year of the optimism, but then 26 could be the front running of once again, a disinflationary or deflationary environment, which we'll see in the 10-year projections going into into next year. On top of that, we've got a headwind in terms of real estate. Real estate right now is also going to probably end up being something that causes, a return to normalcy in terms of inflation, but we'll see what happens. Like, I think 25 is still up in the air. I don't think it's going to be a bad year. And I don't really subscribe to the idea that you're going to always have these massive 2008 level corrections. I think you're going to have, of course, the recession, but most recessions are like 6 to 12 months, maybe 18 months at the most.
Markets usually
And
bottom before the recession or halfway through a recession anyway. So
yeah,
if we're going to have a
yeah,
recession, we'll probably in some sort of bear market or correction before it actually happens. But by the time they announce it, we're probably already bombed in the market at that point. Yeah, I mean, we'll see what happens. One thing that I've noticed that's been happening the last few months, and I've been calling it out for a while, is that there's like you say there's a rotation of value, which I see happening as well. I would call that the broadening of the market versus
yeah,
into value stocks. Secondly, value is like a company's in value territory, which means that it's trading below par and so on. So if you're the broadening of market, that means that these markets get some inflows, and which is most of the value of stocks, right? One thing that I've noticed is that your high flyer semiconductor names, especially NVIDIA, has been massively underperforming the market for the last rolling 30 days. And what's been rallying in the last 30 days was actually software. Kind of started before Snowflake. I mean, Snowflake had pretty good earnings, right? But like not enough to bring it back to the valuation it's at right now. But of course, the market loves to front run. That's just what it does. The market's smart doing the market. And then you have before that, if we go all the way back to October, when the mega cap companies reported, you had the hyperscalers saying that cloud growth is doing very well and is reaccelerating, as well as AI revenue or AI sales in the cloud sector. And you're starting to see that spill over into some of the software stocks. And then you're having like this is like legit. Actually, I'll share it right here because I've shared it so many times, and I'm gonna do it again. I don't give a shit. Let's see here. I got this. Let's see here. I got this ratio right here, right? And then IGV over SMH. So this ratio is basically IGV, which is the software stock ETF, mostly comprised of like CrowdStrike, Snowflake, Salesforce, all the major software companies. And if you notice, SMH is like mostly NVIDIA, Broadcom, TSM, all the semiconductor stuff. IGV has just been totally outperforming it. Like this has been increasing for since basically May. It's just been increasing. And then if you look at IGV over the Qs, software has been massively outperforming tech, right? If you look at SMH over the Qs, that's been decreasing since July. So what this is telling me that software is outperforming the Qs, and the Qs are outperforming semiconductors. So where do you think the money's going? The money's going towards software right now when it comes to tech.
Yeah.
The reacceleration in AI, the reacceleration in cloud computing. You saw Snowflake up like 50% from its lows at 109 or 107 just a few months ago. You see CrowdStrike back to all-time highs. You see a lot of you see Rubrik, which is a company that I've been talking about for a long time. Like I've been talking about Rubrik since the freaking 30s, dude.
Yeah.
I haven't had my old TA in the, this consolidation era that wasn't here. I look at this freaking breakout, dude. And look where it is today. Like I have to freaking zoom out in order to see where it is today. Like now this valuation is getting a little ridiculous when it comes to Rubrik. They're not even profitable. They're free cash flow negative still. But for some reason, it's trading in like over 10 times. It's trading more expensive than a lot of software stocks that are out there. It's actually free cash flow positive. The only benefit it has is that's growing like nearly 40%. But what I'm trying to say is like these software stocks, dude, They get in their premiums, all right?
Yeah.
And how much of this market is pricing in this stuff ahead of time? Or maybe the market knows something or is seeing something that we haven't seen yet, but it hasn't come to fruition yet. And yeah, like saying fallen Palantir, I mean, like Palantir has many catalysts ahead of it that's bringing to its valuation. I don't really think that has to do with this entire trough to peak that it is right now. But given that Palantir has basically doubled since this ratio started, maybe it has. You may be right. Maybe it has something to do with it. But the point I'm trying to make is that like we're definitely getting that broadening out into the other aspects of the market. So that could mean that if you take actually, let me just do this real quick. So the Mag 7 composite. So you take all the Mag 7 stocks and you basically equal weight them over SPY. So the Mag 7 has actually been outperforming quite some time. So we'll see how this pans out in 2025. Is the Mag 7 still going to continue to outperform the S&P 500 in the market? Is it still going to be top heavy?
I mean, to me, it's going to be about which parts of the Mag 7 that we want to kind of focus in on. So if you look at, let me just pull up this thing real quick, just the charts, because sorry guys, give me 1 second.
We will get into Google and Amazon in a minute.
Yeah, Google and Amazon are definitely the value. Well, especially Google is the value play to go with. So if you look at this right here, the performance of the Mag 7, as a share of the S&P 500 growth, they're pretty much at 50%. So a lot of growth
dip you see there.
Yeah,
that's quick dip.
Yeah, but that's I think it's because of what was it? What caused this massive dip for a second?
That's got to be technical.
Not anomaly.
The actual performance.
Yeah. So if you look at
like a micro too, interesting.
Yeah, if you see this on a forward basis, like on a forward price to sales, it's getting back to top heaviness again. Back to where it was. But then it makes sense because if you look at like the margins that these guys are currently being able to extract, it's huge. Let me see where okay, there you go. This is the profit margin on the Mega Cap 8. Look at that. It's higher than previously. Yeah. The question is, what are they basing? They're basing this on all of them as an aggregate, but look at the profitability.
What's the margin? Margin of what? Oh, profit margin? Man.
Profit margins. Forward profit margin.
Crazy, dude. That. It is fucking crazy.
Yeah. So when it comes down to it, these are the most profitable companies on the planet, and they're able to redeploy their capital to buy back shares, issue dividends. Just they're on a tear. Look at this; they've run out of space with regards to the performance.
Yeah.
Of
the what are you doing, Yardini, man? You got to fix this shit. You guys are running out of space. Come on, man.
Yeah.
So even if crazy.
So if you look at this is Mega Cap 8 performance versus X Mega Cap 8. You can see that even though it's gotten back to its like what is it called? Pre-COVID levels, you can see here, not pre-COVID, like whatever stimulus bubble measures, like the mega caps are what really led the way, and they did it by becoming a lot more efficient. But here's where the trick is. You have to value each of these things based on their own individual potential to outperform in the coming years, right? So if you look at like the performance this year, the outlier has been Nvidia. Nvidia has just been killing it year to date, and then of course Netflix, Meta, Mega Cap 7 overall is about 64, and then you have all these. So I say the real potential is right here. Why?
Yeah, no, that dip happened.
Oh, the Japan trade, the Japan trade.
Well, it was also Tesla. Like Tesla is freaking double the amount it was, and then you have Google and Amazon. Well, Amazon's making like freaking all-time highs up to all-time highs, which is amazing. Yeah. Apple's rallying, and then Nvidia is just fucking flat. And I mean, that is broadening out right there. Like all that money that's in Nvidia is not going into Nvidia. It's not leaving Nvidia either, but pushing more liquidity back to the system. It's not mostly going to Nvidia. It's going to the other stuff, which is very good to see. So that being said, why don't you talk about Google's recent announcements, and then I will get into Amazon's, because I think we both are on the same page when it comes to both of them having their
Yeah.
custom silicon. Google's is actually the most interesting. I just read the headlines, but I know you know way more about that than I do.
Yeah. So Google, I think a lot of people, when they look at Google, they see this like woke company that's basically like has majority of its business coming just from search engine alone, and that's the general perception. But the truth is, they're more like an eight-handed octopus. They've got so many layers of opportunity ahead of them, whether that be in quantum computing, which they just released their own custom silicon today, where the number of calculations that these guys are able to do has basically gone up at a tremendous pace. But then usually what happens is the more in quantum computing, the more computations that you go with, you run into a lot more errors, and the errors get fed back into it. And basically you have all these computations that basically take longer and longer and longer. And so they solved a lot of that. And supposedly now they're going to be able to scale up quantum computing, but then also create practical applications. And these practical applications could be world changing. But the point is, Google is a leader in quantum computing, and quantum computing, if you believe, is one of those industries that's going to be a growth driver in the next 5 to 10 years, which it could be a possibility. These guys are at the forefront of it, right? And both on discovery and technology. The other thing is Google Cloud. Google Cloud right now, it's just growing. It's not slowing down at all. One of the things that people really need to understand when it comes to AI, well, not just AI, but cloud in general, is that most people, they have multi clouds, like hybrid cloud, right? So you're going to have, of course, on-prem and then on cloud stuff. So you basically have different things, but then you also have multi-cloud, where you're going to have services that are layered on Google, Azure, and Amazon, right? So what ends up happening is, as one grows, the other one grows along with it. And Google right now is in that position right now where they're going to be growing. And that's a really high margin business. And over time, as they scale up, the business margins keep improving, and they'll eventually get to Amazon level profit margins in their cloud computing division, which is not being factored
it's
in. Yeah.
Well, Google is half the size of AWS. I'm sorry,
Yeah.
GCP is half the size of AWS. So like people say, like, oh, it's growing faster than AWS. Well, I mean, it's half the size. You can't really say that. And plus, like, Amazon has much better margin than Google. Amazon's at 38% operating margins for their AWS segment, which is at $110 billion run rate.
Yeah.
But what about the because you're probably listening. Not probably.
Then they've got
Sundars. Go ahead.
Yeah. Then they have autonomous driving. So they're like the number one and two players in autonomous driving are, Elon and the Tesla team, and then Google and the Waymo team. So that's another like avenue of profitability that they could reach out to. Then they have all these other bets that are like almost like skunkworks. Do you know what skunkworks is? It's in the US government, like in the military, they used to have skunkworks over in Nevada, like Area 51. That's where they did all the hardcore research. Like the SR-71 came out of skunkworks. So they have all these like secret projects that Google works on. Most of them go nowhere, but the ones that they really do hardcore research and apply some money to, some of them end up succeeding and becoming big ideas. As an example, AI, like a lot of people now look at OpenAI and be like, OpenAI is the ones that really revolutionized the AI. And the truth is, actually, Google's the one that started the transformer, all of the transformer paperwork and everything. The reason why OpenAI was created in the first place by guys like Elon was that Google wouldn't become the dominant AI player in the world. So I think a lot of people, they underestimate just how much research talent Google has, and a lot of that stuff, when the products finally come out, they end up being multi-billion-dollar product segments that really lead the way. So I think Google right now is trading at a 17 forward PE, buying back shares at a rapid clip. Margins are improving, growth rate is improving. All those things leading together will probably result in Google outperforming some of the other mega caps in the near
It's probably the sentiment. The
Yeah.
sentiment is really going to drive the price when it comes to this stock. I mean,
Yeah.
just
What
but
the
like
reason?
go ahead.
Yeah. No, I was saying the reason why the stock hasn't achieved nearly as much upward momentum in the recent few months, I would say last 6 months, is because of all the litigation around the monopolistic practices of their their bread and butter, which is search.
Yeah.
So I think the DOJ investigations around monopoly and all that stuff are definitely hitting them in terms of valuation. But the good thing is, I think the Trump administration understands that having these major companies be the outliers of cash and then being able to deploy them in innovation ends up bringing the whole boat higher, right? So it's almost like these big companies, it's good for America that they're the dominant players in the world. Like the last thing you want to do is break up your engine, be like, no, we're running too fast. We need to, we need to dumb ourselves down a little bit. Like I don't think Trump is in that mindset.
Yeah, I just like Google it, and I just Googled it. So yeah, Lena Khan was appointed chairperson of the FTC by bipartisan support in Congress when Biden became president. It's really funny. It's like your ass is out on January 20, girl. Like you're done. If you look, I mean, like it's a sweep. It's a sweep right now. Republicans control the entire thing. It's probably not going to happen overnight, but Lena Khan's days are definitely numbered, especially with all of the major corporation CEOs on board with Trump. And it's interesting because like that chart that when you saw that big dip in the PE multiple or in the percentage of the S&P 500, like it had that dip right before Trump was, and as soon as Trump was elected, like that just came right back. Mostly because it's like this is pro corporate tax rates, it's pro corporate innovation and expansion, pro corporate. What's been lagging in the last 4 years was like major acquisitions in mega cap companies, right? Like you just barely saw it. Like when was the last time you saw me? Like Google just had their acquisition of Wiz. Well, no, actually Wiz backed out of it. But their acquisition of HubSpot was blocked. And then they said they're going to buy Wiz, and Wiz backed out, whatever. And who knows what that'll happen. The big acquisition I think Google's going to make next is probably GitLab, in my opinion. They own 10% of it, and the developers use it all the time. I think it's a very good software. I could see it happening. But, there's obviously better options out there. But one thing also is that you have all these litigations that happen in Google. Once you take out that rope or that chain from Google's leg, the thing's probably going to run, especially when you see a lot of these litigations drop off the radar. The company spends less money in litigations, and just generally the sentiment will get better with that. So that'll definitely help the situation. Hold on, you shared something here.
Yeah, I'm gonna do my best Trump impression because Trump wrote, he said on the campaign rally before this happened, it's like, I actually got a call from Sundar, who's a great from Google. He's a great guy, very smart, head of Google. And he said, sir, I just wanted to tell you what you did with McDonald's was one of the single biggest events we've ever had at Google. I'm like, bro, what is going on here? Google figured out that this guy was going to win, and so they've been cozying up pretty closely to Trump.
The big question we need to ask ourselves is, why the fuck did we not see this shit before we put our bets on it? It's just
I don't know. It's because I live in Atlanta, bro.
Yeah.
I live in Atlanta, and I have a bunch of liberal ass friends. That's why. Okay, I have a lot. I am the lone Republican in a group full of liberals. Like when I go on these cabin trips, I gotta sit there and listen, like how the war in Gaza, and I'm just like, oh great, here we go, and the funny thing is, I'm like hardcore militant about certain ideas, but like I have to temper myself, otherwise like the cabin trip is gonna turn into like a 8 versus 1 situation with my wife.
The government, man. The government. I mean, that was probably obviously in hindsight 2020, you can see all the signs and everything after the fact, but I don't know, maybe I was just stuck like very close-minded into it. I don't know, the odds were in the favor, so like that's why I saw it, but obviously like the way my mind works is that like if I think
That
something is
stupid
right,
Yale that
yeah,
stupid Yale dude, bro. He messed me up. All right.
the keys, yeah, no, but like
The
if
keys
I
to the
yeah.
presidency, bro.
Anyways, I could like there's probably like a better way I could have spent that the couple of $1,000s that I lost, but like just
Me
this is
too,
probably the
bro. Me too.
stupidest way to lose all that money. But anyways, I mean, it's not just that, dude. Like, also the TPUs, the story of the TPUs being
Mhm.
able to like draw computations that could take normal CPUs or GPUs like 5 years to figure out. Like, that's freaking crazy. But in all honesty, I think Google was already doing this shit to begin with. Like, I don't think it's anything
Yeah.
new. I think they were heading in the direction, but I think now it poses a big question. Like, you know, when are Nvidia's days numbered? And if it is, that's a lot of money to be leaving that company. And where's it going to go? That sort of thing. But like, you're re-rating these companies. And I'll get into Amazon in a second. Like, these are no longer like just cloud-centric companies. These are no longer advertising companies. These are no longer developer-centric companies. Like, they're proprietary silicon or GPUs that are created by these cloud giants or hyperscalers. That's a very high margin business for them, because
Yeah.
not only do they not have to worry about buying these chips from Nvidia at a premium, but they're creating it themselves. They're able to innovate themselves at a much faster rate versus just waiting for the next one to be released. And then on top of that, they're offering their own clients a much cheaper solution for similar processing. So what I want to talk about as well, because you're in agreement with this as well with Amazon, Google has a TPUs, and Amazon has Trainium. They also have Inferentia, but Trainium is probably the biggest one that's talked about. They just had the second generation that was released. It's able to produce probably similar throughput as the H100s, which is 2 generations behind Blackwell for NVIDIA, and that's still heavily used by a lot of clients as well on the on AWS. But it's able to provide the same compute for 30 to 40% of the cost. So you're going to see a lot of people switching from the Blackwell ones that are going to come out, because this is good enough. This is quote unquote good enough for them, right? Because like not every company needs to train like large language models or run like $200,000 chip factories or whatever it is. Like, you know, they just need the good enough, right? And if you think about the efficiency of these models that are coming out, you know, with Llama, and how each generation of Llama demands less compute, is like, do you really need this much compute in order to do these tasks that you want? And then with the AI agents that are coming out as well, like if you guys haven't watched the Sam Altman interview with Andrew
Ross
Sarkin,
Sorkin.
Ross Sarkin. Oh, Andrew Sarkin. I don't know. Anyways, you should really watch it, because they could do this is something that I've been reading about a lot. Like Salesforce talks about it with their AI agents. Microsoft talks about it with their already AI agents out there. Snowflake, ServiceNow, all these companies talk about it. It's because you have your large language models, which is basically the gigantic models that most of these smaller models usually reference on when they need a more definitive, more accurate answer. And then you have the chatbot, which communicates with this LLM between yourself and the LLM as well, because you're not communicating with the LLM directly, you communicate with the chatbot. The chatbot turns your query from text into code that it's going to query the LLM for. And then what they're trying to do is when I say they, Sam Altman, Microsoft, Salesforce, all these companies are trying to do is that they're trying to create these AI agents as a layer between all of the models out there and yourself, where your AI agent caches all of your requests that you put in and is able to identify which model is the best to produce the output that you want. And with that, it's able to make this process more efficient. So let's say there's one case where it's like you already asked a similar question like a week ago, but then you're trying to find more of this answer a week later. Well, it has all that information cached in its system that it's able to possibly deduce the outcome that you want by referencing a smaller language model in that case, and therefore using less compute power for the business and less cost to you, making the entire process more efficient. And then if it needs to reach out to like a large LLM, a large language model or something, it'll do that, right? But probably 95% of the time, you're not going to need to reference ChatGPT-4 with those extreme costs. You could just do something as small as whatever local LLM is stored on site in AWS, whatever it is. So being able to make that entire process more efficient, that might actually be something that's not as bullish for NVIDIA. And I think what all of these companies, Google and Amazon, also Salesforce, Microsoft, ServiceNow, Snowflake, and all these companies are starting to show that this is actually a viable method to be able to profit off of this AI And I think we're going to start seeing it in a lot of software companies, which is the reason why it's been demanding a higher multiple lately, because they're able to capitalize off of this and have less capex toward buying $20,000-$40,000 Blackwell chips, and instead produce their own proprietary models and even custom silicon chips at a much higher margin. So
Yeah,
I mean,
the best analogy I could give towards this is like, do you really need to have a Ferrari branded taxi? Like, no, you just need a regular, Ford, right? That is what you actually make money on. Like, imagine right now you bought a Ferrari. Yeah, it could go 200 miles an hour, but you don't need it to go 200
you don't
miles
need
an
it.
hour to get,
You don't need that power.
So
Yeah.
that's the thing. So a lot of these services that, or are basically being created, they don't need Blackwell chips. They just need something that works at an efficient price. And once again, if it's something like if you take that taxi model, once again, you don't need a Porsche, you don't need a Lamborghini, you just need a car to get you
Camry.
from
Just
and
get a
that's
goddamn
where the
Camry,
money
man.
lies.
Just get a goddamn Camry for like $30,000-$40,000. You don't need a goddamn
Bro.
$200,000 Range Rover in order to accomplish your task. But yeah, no, that's like the whole point behind all of that, and that's the vision that I see in 2025 for a lot of these major hyperscalers. Maybe not so much Microsoft. Microsoft has gotten a lot of fluff in its valuation based upon the initial growth of AI. So it kind of is hard for me to see, especially with Azure. I mean, maybe with Azure, but that's not like the whole source of revenue for Microsoft. But at the end of the day, like you take these other companies that are very diversified outside of AI, outside of compute, like Google and Amazon, and I think these two companies are going to do very well in 2025, in my opinion.
Well, there's another problem too for Microsoft that maybe people don't necessarily think of.
Super intelligence or AGI?
No. It's remember they have a giant investment in OpenAI, and who is OpenAI's number one critic? Elon. And Elon is going after the nonprofit version. So imagine right now Microsoft had to basically put in all these billions of dollars into OpenAI, right? And what did they get in return? They get screwed out of it because that thing goes back to not being a nonprofit again. Imagine that happening. That's I'm telling you, that's something to keep in mind. Right now, Elon is going to war with Sam Altman, right? And the thing is, if Satya's allied with Sam Altman, that could bring a lot of negative attention.
He picked his side, dude. These CEOs, they pick their side. They're siding with Trump, which means that they're going to be siding with Elon if they want to be in the right side of the ship. The only thing is that, like, see, this is the thing with the Tesla stock, right? Like, if a lot of the major upside in Tesla stock, there's a lot of potential to optimists, FSD and stuff, but like that, we're not seeing that today, right? Like, a lot of it really has to do with that Elon has the ear of the president, right? He is a hotline of the president, and that's assuming that that's going to continue for 4 years, right? Like, the second there is any type of headline article that says that Elon is out of the circle or even thinking about being outside of the circle, like, Tesla's going to drop like 20%. It's fucking over for that shit, dude. Like, that's the reason why the thing's been rounding so much. But, at the end of the day, with the way that things are going, Mark could say, just say bullish. I don't think it's going to happen anytime soon, but it probably will happen sometime next 4 years. Like, there's going to be major volatility with Tesla because of that headline.
Yeah, it'd be interesting to see like how Elon could influence Trump and some of the picks. Like, I mean, remember, you're in the Doge efficiency thing too, so you can have suggestions that basically kneecap a lot of open AI's BS, like stuff that they could be doing. I don't know. I'm telling you, when it comes to politics, it's a billionaire's game, so we'll see what happens.
This guy's right. Sam Altman gives like the most, like, when I'm watching this,
and remember,
guy,
Sam Altman was a huge backer of Kamala. Okay, him and Reid Hoffman were like, dude, you got to see how crazy these guys backed him. So now, bro, you know what they say, right? With if you come for the king, you best not miss. Well, they came after fucking Trump, and they missed.
Sam Altman, like, he's one. If I were to picture like a villain, right, like an evil, crazy villain, it would be Sam Altman. Like, this guy looks so fun. Like, he tries to play off like this innocent, well, not really innocent, but like he tries to play off, like this oh, I'm just like a nerd, I'm harmless, whatever. Like, this guy's fucking evil as fuck. He knows what he's doing. And he's trying to portray a different image than what he's actually doing, which is the reason why it makes him so fucking evil, right? Like, you see everyone freaking leaving OpenAI saying that this guy's fucking crazy. And like, he comes up on an interview and says like, nah, they don't know what they're talking about. There's a lot of potential here. It's like, no, you're fucking evil, dude.
Yeah.
SBF vibe a bit. What's SBF?
This is why you got to be careful with who you back as a politician, because if the wrong guy gets in charge, again, you're not exactly gonna have a great day. So
That's why I never get in fucking involved in politics. I'm pro market. Whatever makes the market go up. I don't want to give a shit who president is.
Yeah, but the thing is, remember, and the way that OpenAI tried to basically, according to, like I said, you have to read between the lines, but according to the people, like, quote unquote, the insiders of so a lot of the Silicon Valley decisions and stuff, basically OpenAI was trying to lobby federal regulators to have like a closer, try to regulate AI, but do it in a way that kind of favored OpenAI and basically leave out everyone else. So like right now, new messaging on AI regulation is largely thanks to OpenAI into a lobbying powerhouse. The startup has spent more than ever to influence Washington, brought on staff with deep ties to DC, including Kris Lahan, blah, blah, blah. So this is I'm telling you, this is the thing that's gonna, and then here's the other thing. On the other end, who's in charge of the AI? Who's the AI czar? David Sachs, another fucking Sam Altman.
Oh yeah, yeah. No, I know that guy is. What did they put him in? Wait, he's in charge of the whole AI thing. Like, it's just what the fuck, man. Like this guy has Silicon Valley written all over him. It's just.
Well, David Sachs backed. Yeah. David Sachs backed Trump like there was no Trump. I mean, if you watch the All In podcast, bro, David Sachs flipped everyone. David Sachs flipped Chamath and what's his name? And God, and his face is right there. Berg, something Berg.
Andy Friedberg.
Exactly. Huh? Yeah, David Friedberg. So all David of these things, yeah. And now even Jason Calacanis is kind of like, Jason Calacanis is kind of like, if you look at what Jason was like 2 years ago or 3 years ago, oh my God, he couldn't wait to be anti-Trump on everything, So
how the fuck do we not see this shit, man?
I'm telling you, we got a bunch of fucking liberal friends. That's how we didn't see it,
Dude, almost all my friends are Filipino, man. Like, they don't know what the fuck is going on out here.
All my friends, they were all pumping me full of the Kamala juice. That's why I didn't see it. I was like, God.
How the fuck did we not know this shit? That's the whole thing I was thinking of. It's like you have all these CEOs back. You have Jeff motherfucking Bezos withdrawing a Kamala pro article in the Wall Street Journal, or not the Wall Street, Washington Post. And it's like, fuck. Damn, man, not see this shit. Anyways,
it happens. Whatever.
You want to talk about convertible notes?
Sure. So just to give you guys a gist of this convertible note trade that's going on, basically a lot of the hedge funds are utilizing this model for gamma. Like, this is called gamma trading. If you just show my screen real quick, essentially what they do is they buy the convertible debt. It acts like a really long call option, and then what they end up doing is just trading around. So basically, here you can see that what they do is when it gets to a certain level, they start shorting the shares, right? And then after it gets to a certain level, they end up covering the shares, and then they do that same thing over again. And as it rises, they start to do more shorts, and then it goes further up, they short more. After a certain period, they have to issue more convertible debt in order to short more. So then what ends up happening is it keeps rising. And then eventually, when things go in the opposite direction, all of their short positions, they start covering them. But essentially, by that time, the market's already kind of moving down. And what ends up happening is eventually the stock price gets back to closer to its net asset value. Right. So right now that's happening with Marathon. It's happening with MSTR. Not this part. This part is happening. So as long as the underlying value of the stocks are rising, then that creates like a floor. Now, the thing is, What these guys are doing is essentially taking on zero interest debt and utilizing it to buy Bitcoin. And because of that, it kind of keeps raising the NAV, the net asset value of those specific securities. So it's kind of this weird balancing act. And I was trying to explain this to Amit, and I said the best example that I can give is like it's almost like a dry humping, where basically you're just like stroking back and forth, back and forth. That's what these guys are essentially doing. Every time this thing goes up, they short it, and every time it comes down, they cover their shorts, and then do it all over again and back and forth, back and forth. Eventually, this trade dies. Like if everyone does it, it doesn't work anymore.
When it's starting to do
because
it,
what happens is volatility ends up getting you. It's going to crush. It's going to get crushed, and when volatility gets crushed, what's going to happen is the stock is going to trade closer to its net asset value. It's not going to have this giant premium. Like if you look at MSTR like MSTR tracker. This is a good example of what keeps happening. Let me just show you guys. Okay, so you guys see this? This is, what is this, confetti? The hell is this? Okay, whatever. The point is, right now, if you look at MSTR and where it's trading from a premium perspective, what ends up happening is every time it jumps up to about 3 in total net asset premium, they end up issuing more convertible debt. So that's usually the short sellers who are going to MSTR and saying, hey, listen, issue more convertible debt at a higher price, and we'll give you the money. You buy back the share, then you can use that to buy more Bitcoin. So right now, this is where we're basically in right now, at the bottom of it. So right now is I wouldn't say it's a great time to buy MSTR, but if you're going to buy, you typically want to buy around this level. So you see how in the previous times it's been kind of over here with regards to net asset premium. You kind of want to buy as low as possible. So if you buy here, that means that you're buying with the least amount of premium to the net asset value. And so I think eventually you'll get to closer to like 1.5, and this is where like you'll see a lot more short covering. And then if this trade collapses, this thing should go back to being 1. So I don't know when that's going to be. And remember, this 1 can be very, very different because now you're looking at the x-axis. So if let's say Bitcoin drops to like 60s, then the new price would be like somewhere over here as opposed to being here, So yeah.
Did you see the see the headline for Riot?
Yeah, that they're doing a convertible debt offering too. See, this is the problem. When there's a good thing, everyone gets into it and they start doing it. And when they start to do it, other people do it. And then eventually it becomes like James is saying, a Ponzi scheme. And once you get into like Ponzi scheme, you can make money in a Ponzi scheme. The way that you make money in a Ponzi scheme is you have to be at the top of the pyramid. If you were the first, second, third person in a Ponzi scheme, you are going to make a killing. The point is to get out before the bottom falls out. That is how you make money in a Ponzi scheme.
I think too many people are like calling it a Ponzi scheme right now for it to actually fruition into a Ponzi scheme. I mean, obviously, I don't know. I don't know if it's a Ponzi scheme because, like, technically speaking, we haven't even come close to the expiration of the convertible notes that they have there, or maturation of it. And Bitcoin is still pretty elevated right now. So it's kind of hard to tell. It becomes a Ponzi scheme when Bitcoin actually drops. But I mean, if Bitcoin drops down at
that's
probably a catalyst for.
No, it becomes a Ponzi scheme when new convertible debt offerings dry up, when no one is willing to give you more liquidity to buy more Bitcoin. That's when you start to see the Ponzi scheme really roll over. Like it's like this. Like if, in a Ponzi scheme, what essentially happens is, let's say you give me $100. I tell you I'm going to give you $150 in 2 weeks. Now I go to another person. I tell 2 more people, hey, give me $100. I'll give you $150 in 2 weeks. Now I take that additional cash that I got and I give some of the, and I give it to you. So I give you $150, but essentially I'm just paying you what I got from the other guys. Now the thing is, you feel like, oh my God, this guy gave me my money. So let me give him 300. Now I take your 300 and give these 2 guys more money. right? And then I find another 2 suckers to keep doing that, and it just grows like that. So
So
that
he's
is what
right.
a Ponzi
Bitcoin is a
scheme is.
Ponzi scheme. Bitcoin's a
Huh?
Ponzi scheme.
Nah,
Bitcoin's a Ponzi scheme.
Bitcoin is not a Ponzi scheme. The Ponzi scheme only applies to this scenario if there's a complete breakdown in the number of people wanting to basically be involved in this. I think this arb trade is like a Ponzi scheme in that basically what they're doing is every time it goes up in value, they end up, giving it money and then shorting the stock and then making money on that. But eventually, like I said, as the volatility dies down because so many hands are in it, you eventually run out of the profit margin to keep doing this. And if you run out of the profit margins to keep doing this, new convertible debt holders are not going to be willing to give you any additional money. And if they're not willing to give you any additional money, you're going to trade closer to your net asset value. That's where the problems start to happen. And that's where now, if you're trading closer to net asset value, then like right now, Marathon should be trading at closer to 10 to 15, not 20 something, So I think that's the goal. Yeah.
It's basically moving on its volatility of Bitcoin. And that's when usually a lot of these miners rally is when Bitcoin appreciates very quickly. Not when it's flat. I mean, even if it stays around $100,000, but if it's flat for like next 3 months, and like miner's going to get hit, just like it did when it was like around $50,000 to $70,000 for Bitcoin. So that I really think that's what appreciates with the miners, and we saw a little bit of it. We're seeing Bitcoin kind of showing a little bit of volatility, so like the miners are pulling back a little bit. But yeah, I mean, they're probably right. They're probably setting the floor on it. I mean, Marathon is still like around $24. So according to that chart you've been sharing, it would have to drop to around 21, 22 if Bitcoin is still 90K plus in order to maintain this valuation of the floor. But if Bitcoin drops to like 65K, then Marathon's going to go down like 15. So I mean, we'll see what happens there, man.
Yeah.
Yeah, I mean, I think that's about it.
I don't know if it'll drop to 65. I think there's too many vested interests in seeing Bitcoin rise. Both government sides are thinking about utilizing this thing
it's just
as
a
reserve.
shakeout.
Yeah. I think the shakeouts are going to happen. I think the key is with regards to this arb trade, we have to keep our eye on new issuances. If new issuances slow down or if they stop happening, that's when get the hell out of these miners or get out of this whole thing and just go into Bitcoin. There's a lot of people that are long Bitcoin but short the miners. So keep that in mind.
Yeah, I mean, I made a considerable amount of money with Mar already. I'm not trying to knock it out of the park right now. I mean, it would be nice if it went up, but
I'm milking this thing, bro.
Yeah.
I'm using a covered. I told you I'm covered. I'm using a.
Are you doing it right now?
Mm-hmm. I'm using a covered strangle to freaking milk this thing, bro. Because the thing is, like, the premiums are amazing, dude. Anytime this thing goes up to like 28, covered calls. Anything this thing comes down to like the low 20s, cash secured puts, and boom, they both expire worthless. Yeah.
Why don't you go change your tag on here to TJ the wheel deal, and then we can continue the segment, because I feel like I'm talking to TJ right now.
I spoke to TJ. I spoke to TJ about it.
I asked him for advice.
I actually called TJ. I didn't ask him for advice. I said, look, if you're trying to wheel and deal a stock, Marathon is the way to go right now, man. It's not. I gave him the what is that thing called? The formula too, like the one that I had in my calculations on net asset value, like the one that, that's in the Patreon. I said, here, just follow these strikes and, make some good money on it. So he did.
So Kris Patel, sell calls, sell puts, collect premium, manufacture the win, man. Time to manufacture the fucking win.
Not even close.
Yeah, I mean, the premiums are there, so why not? Why the fuck not? It's gonna probably go sideways for the next few months, so we'll see what happens.
Yeah. It's just too juicy to ignore. It's like the opportunity is too juicy,
You sound like TJ right now. I used to be in that guy's podcast all the time. He's talking about the premiums. You're talking about the premiums.
I mean, I'm a little bit more of a. Oh God, you're right.
I'm just messing around with you.
I've turned into Kris the wheel deal. Shit.
Kris the wheel deal. So some call, some puts, collect premium. No, but honestly, man, it's a good strategy. Definitely that is the way you play miners. You don't buy and hold miners. That's just not how you play. And hedge funds don't either. You buy and sell it, short it, whatever it is.
The one thing people need to just keep an eye on is with the miners. Like look at this right here. Just show 1 second. Okay, this is Marathon Holdings. Okay, you look over the last year, Bitcoin has done what? Gone up, right? So if you look at like BTC, right, which is
damn, there's a new feature on there. I don't know that feature existed.
No, they don't have. No, I'm trying to look for the Bitcoin index, ETF index.
BITO. Just do BITO.
BITO. Okay.
Oh wait, no. That's not a good one. That's not a good one. Do FBTC.
I need one that trades BTC.
Yeah,
that trades FBTC. Closer, right?
FBTC. Okay. Yeah, because BITO has dividends.
Compare. Let me get this one. What is it? FBTC.
BTC. Yeah, that's the Fidelity one.
Again. Got it. So if you look at this, look at where each one is trading, right, for 1 year, and then look at 5 years. So it makes more sense to just basically hold Bitcoin itself rather than trying to play around with the miners who are unprofitable in the sense that they're basically utilizing operating, the money that they're making from mining to pay bills, and sometimes they hold it. Like Marathon is holding it for sure right now, and which is why they're getting a little bit of premium. But if you really are a big believer in Bitcoin, just buy Bitcoin. Don't fuck around and do this other bullshit.
Can you imagine? I had to look it up real quick. I did a little bit of fact check, but look at CEO of Marathon. No, go back to your screen. Go back to your screen. Fred Thiel.
Brent Thiel. Let me see.
No, Fred Thiel. Fred Thiel.
Okay, Fred Thiel.
He has a specific interview where he says that he is not related to Peter Thiel, but like, I'm fucking crazy. It's like, yeah, that's a brother. No, but apparently he has a brother named Peter. Yeah.
This guy is definitely pumping his bags, bro. He's pumping hard. He's on Twitter like every day. Dude.
You gotta pump those bags, man.
Yeah. Breaking Fed Chair Powell says Bitcoin is a competitor to gold, not the US dollar. I'm just like, I'm looking at his Twitter posts, and it's just, my dude is just pumping his bags, man.
Of course, man. He knows the fucking game. He knows the game.
Yeah. Good for him. Good for him. Give me some of that Mara money, baby. I still got some leap spreads on Marathon.
I got out of that shit. I got out of that. Those aren't gonna move. I'm not gonna hold on to that to see it. Because I even looked 40, at I mean, you made 40 because we were in a 19, but now the premium, both of them, has escalated so much that like you're not really going to capitalize off it. Especially look at the 5-year chart, like it's not going to go anywhere.
All right, whatever. Thanks, Fred Thiel, for giving me a nice 40% return in a few months. I'll take not even a few months.
That was like 2 weeks. That was like 2 weeks, dude.
I'll take
are we gonna watch the Hood Weekly stream right now?
Yeah, let's make fun of him. Let's go ahead.
Okay,
let me pull it up.
I got it up. I already got it open. I got it ready to go.
All right. Is it still live? All right, let's watch this.
Potentially you might see them dip their hands there, but I'm sure Fed rate decisions is going to be right around
Look at them.
Every weekend we'll try to get a new person.
Hold on, let's do this.
I can't wait, dude. This is so exciting.
Okay, do this. No.
Robinhood's a name that needs more recognition, and
mute them.
Whenever I see a name like this,
and then we're gonna pretend like
I don't know why
as them.
Hey guys,
I don't want to make fun of Tanner.
I'm gonna make fun of all of them. Screw that. They're all my friends. You can only make fun of your friends. That's how it works. So, hi, my name's Tanner. Look at my glasses. Look how big they are. That means I can see a lot. And I read lots of books. And then Ahmed's going like, look, I'm wearing glasses too. That means I can see a lot. Look at my eyebrows, how they're pointed up. It's because I don't know. In the context of Robinhood. and then Crossroads. I actually like Roy, so I don't know how to make fun.
I like Roy. Yeah, can't really.
I like
he's
Roy.
Got a PhD. He's got a PhD. You can't fucking make fun of him.
Yeah, but it's in like theology, bro. Like, how much? Like, really? What you gonna do?
He's a fucking doctor. If you're gonna make fun of a doctor, make fun of your wife. Don't make fun of Roy.
All right. Hold on a second. It's like, so Amit's probably asking a question like, guys, would you give Vlad a mustache ride? And then Tanner's like, yeah, I'm growing this out just for Vlad. You know, they ended it, bro. They ended it.
Did
Damn
this
it.
just come out today? The G-Gen Dell?
Yeah. I hope they make fun of us. It's only right that they do that.
No, man, we're small fish. They don't make fun of us yet.
They should. That's how it works. I want to see what they got against me. It'll probably be like, hey guys, my name's Kris. I sell Palantir at 15. I'm stupid,
Well,
you know, something like that.
I mean,
because that's the one thing they have against me. They've got their fucking Palantir. And it's like, every time I see Palantir go up, it's like a slap in the face.
Well, you saw it made like a 20% round trip today or 12% round trip.
Yeah, it's pretty nuts, dude.
It's pretty. Yeah, I mean that's just what's going to happen when you have that much volatility and volume on it.
Rob just fucking stabbed me in the heart, bro. Look at what Rob said. Your pot is too hidden for them to find.
Look at all these fucking people showing up when that
get out of here, Matt.
Is over.
I saw you take a shot at me on Twitter.
They're only here.
Up, Matt.
They're only here when the fucking pod is over. That's the only reason why they're here, because they feel bad for us. We're secondary people. We're secondary.
Matt, you fucking Judas. I saw what you wrote on Twitter. You Judas. All right.
Oh shit. I gotta go. My son is passing out. I gotta go get this kid. All right,
dude.
All right, later.
Bye.